The Congressional Budget Office found that out of 30 of the top developed nations, the United States ranked number 27 in the collection of corporate taxes relative to GDP. That means we take the lowest share of corporate taxes out of pretty much everybody else. And on top of that, during the 4-year period between 2014 and 2018, the richest 25 people in America paid an effective tax rate of just 3.4%. Now, it's very likely that you watching this right now pay an average of 26% of your income in taxes. Now, the constant argument from right-wing lawmakers and think tanks and lobbyists is that corporations and the very wealthy pay a very high total amount in taxes. They're always pointing out these massive dollar amounts. And, I mean, of course they pay a lot of money in taxes because they make a lot of money. All of this is relative, and in this case, it's relatively low in terms of their share of the tax bill and the percentage of earnings that you and I pay. The overall dollar amount really has nothing to do with the cold reality that the wealthy absolutely avoid paying an equitable share of their economic income into the tax pool. Now, the main reason for this is that rich people just don't accumulate their wealth like the rest of us. Their wealth accumulates upon itself through compound interest and unrealized gains. Unrealized gains is the term for wealth that increases but is not liquid. It's held in some asset or investment vehicle. And a lot of everyday Americans actually have unrealized gains too. But for most of us, the primary family home is where 70% of unrealized gains exist. Collectively, the richest 64,000 households in America only have 2% of their unrealized gains tied up in primary residences, and not actually a ton more than that in real estate in general, which definitely surprised me. It's somewhere around 6% in total. Rich people keep their money in other places that helps it grow way faster than your Pap's prefab home with the grimy siding from 1982 that desperately needs a good power washing. 93% of untaxed, unrealized gains accumulated by the wealthy are held in stocks, in mutual funds, and businesses that they own. So one of the means by which the wealthy accumulate more wealth is through capital gains, which are things like stock dividends, and these are taxed way less than your salary, with most people paying no higher than 15% in capital gains taxes. Dividends can also just be automatically reinvested and stay unrealized, and further compound the growth of a particular stock account because it's more money being inserted into a particular holding. The richest 64,000 households in America only paid taxes on $316 billion in capital gains in 2022, despite earning $8.5 trillion in unrealized capital gains. That discrepancy amounts to less than 4% of capital gains taxes paid. If we just zoom out on the timeline a little bit and take the years 1989 to 2022, for example, there were $3.2 trillion in taxes collected on capital gains in that time period. Compare that to the $48.2 trillion that were not taxed at all. Not 1% of $1. And we desperately need to address this because close to 27% of all wealth is made up of unrealized capital gains. And when you look at just the top 1%, that number rises to 41%. Almost half of the entire wealth of the top 1% of earners comes from ever-increasing unrealized capital gains. But things only actually get worse from here. In 2021, ProPublica got a hold of the tax records for several thousand of the richest Americans that collectively covered 15 years of tax filings and audits. And they published a big expose about this that you can find down in the didgeridoo with the rest of the sources and studies for this episode. One of the things that they set out to uncover was the true tax rates of the top 25 richest Americans. So they compared the taxes they paid to their overall wealth accumulation during the same time period. And they used data from Forbes to figure out how much that wealth increase was. In just the years between 2014 and 2018, these 25 people earned $401 billion. And the taxes they collectively paid were just $13.6 billion. That's where we get the effective tax rate of 3.4% from the top of the video. I can practically guarantee that if you're watching this, you paid at least twice that percentage in those years. Meanwhile, ProPublica reported that the American middle class saw their wealth rise an average of $65,000 in the same amount of years, which they also confirmed was mostly because of appreciation of a primary residence. And at the very same time, the middle class tax bill was almost the exact same amount of money at $62,000. Womp womp. And many of the super wealthy have just gone through years where they've paid $0 in taxes at all, as in nothing, not any of the taxes. Some of them have done this for multiple years in a row, like our current tropically hued overlord, who famously did not pay taxes for several years while living in a penthouse made of gold, and yet still somehow convinced a lot of middle-class voters that he was just one of them. In 2007, Amazon's stock price doubled, and Jeff Bezos grew his personal wealth by $3.8 billion. He reported just $46 million in income, and then he offset every single one of those dollars. Bezos paid absolutely nothing in taxes that year. In 2011, he paid no taxes again and reportedly also received a $4,000 tax credit. From 2016 to 2018, his true tax rate was lower than that 3.4% average. It was just 1.1%. There is a tactic called buy, borrow, die that's often talked about in a lot of these conversations. This is another way that rich people make their spending money, and the idea is basically that rich people have these enormous assets that they just never have to use and therefore don't pay any taxes on. And so what they do instead is that they take out loans, borrowing against those assets, and then they just live off that loan money and pay back the loan interest, which is a fraction of what they would have paid in taxes. And this whole thing is a really important sticking point in the whole conversation, and there's also a brand new study from just last year that sheds a whole lot of light on this for the first time ever. And this is really important, so keep it in mind for later when we start to talk about solutions. Right now we have to talk about the corporate aspect of this, because even when the wealthy own businesses and then they park their wealth inside of those, the businesses are often not paying taxes either. One of the most egregious examples of this that's publicly reported on was General Electric's tax bill from 2023. The corporate juggernaut earned roughly $7 billion that year and paid no federal income tax on any of that. And they got a refund of $423 million. They are far from the only company with a reverse tax bill. In 2025, 88 companies paid $0 in taxes while making significant profits, and were also given refunds from the government. One of those companies was Tesla. Tesla paid zero federal taxes on its $5.7 billion income last year.
I love Tesla!
Other companies on the list include Peter Thiel's Palantir, also Walt Disney, Hasbro, Southwest Airlines, Kohl's, Etsy, PayPal, Citigroup, CVS, GoDaddy, Brinks, and the parent company of Taco Bell, KFC, and Pizza Hut, which is called Yum Brands. The United States loses anywhere from $500 billion to a full $1 trillion in tax revenue every year due to companies and wealthy individuals cheating on their taxes or just outright not paying them. This is something called the tax gap. It's the expected revenue from taxes versus what's actually collected on time. There are all kinds of reasons this gap exists because of different strategies and loopholes that wealthy doofuses can take advantage of. In corporate land, one of these reasons revolves around the type of corporate entity being taxed. Legal partnerships are a kind of incorporated company that generates a ton of revenue when they get audited by the IRS. You know, like when the government actually decides to take a look at how they're handling their books. Due to their specific tax structure, they can hide income easier than other kinds of companies. A study from Stanford found that for every dollar spent on operating costs, the IRS can get back $20 from partnerships for cheating their tax bill. That's even more than audits recover from wealthy tax cheats in general, and that number is still very high at $12 for every $1 spent. Let me just stop there and say that again, just so we can be really clear about this. We recover $12 in unpaid taxes for every $1 spent on IRS operations. There is a lot of propaganda out there working overtime to convince you that the IRS is bad and we should really just cut its funding or eliminate it altogether. And that's because the people who would benefit from this are the people who avoid paying taxes. And they know that if the IRS had a bigger budget, they'd have to pay more taxes. Okay, so what do we do about all of this? People have all kinds of crazy ideas for fixing the tax code. Unsurprisingly, a lot of the ones being pushed the loudest would also benefit extremely rich people. One of the most popular solutions out there is a flat tax. I'm barely on Facebook anymore, but I saw somebody that I know pushing the idea of a flat tax the other day. And a flat tax is a proposed tax that is just a flat percentage that everybody pays, regardless of income level. Currently, we have a progressive tax system where higher earners theoretically are supposed to pay a greater percentage of their earnings in taxes, and the rates get higher in graduated tiers the more you earn. But some states use a flat tax system for income taxes where every single person would just pay 3.07%, like is the case in Pennsylvania, for example. What happens in the event of a flat tax is that wealthy earners pay significantly lower amounts of their wealth in relation to everyday Americans. Personally, I don't know how any serious person concludes that this makes any sense, because in this system, you're solidifying the fact that rich people get to pay less and accumulate more. A related idea is to implement a consumption tax. And one of the most popular consumption taxes people talk about is a value-added tax, or VAT. A consumption tax is extra money that you pay for goods and services, and when that's a VAT tax, extra taxes are paid during each stage of the process of making a product. I think consumption taxes come from a similar kind of morality tale that has its origins in the blue-blooded American story of hard work and discipline. Because the rationale that I always see in the consumption tax argument is that you'd only pay taxes on your spending, and so what you're doing is you'd be encouraging people to live within their means and just be better and work harder. But that idea is missing the realities of the American story right now. And the data shows us that people are living exactly the way they need to be in the vast majority of cases. And the imaginary welfare queen imagery is the main driver behind this desire to punish people that some believe are just like lazy or whatever. And a lot of the time, consumption taxes are also proposed as a complete replacement for income tax altogether. And this would also allow rich people to just keep way more of their money and avoid a lot of taxes. Because very importantly, and again, just to reiterate, the share of your overall wealth that's spent on taxes falls the greater the income that somebody earns and the greater wealth that they have. So you'd be paying a larger share of your wealth than rich earners would. So you and Warren Buffett would be paying the same amount of money for, say, Lucky Charms cereal or Clorox cleaning wipes, and the same amount of taxes on the same amount of magical deliciousness, and that's just all the taxes that both you and him would pay. So in this case, we'd just be letting the people who can afford to spend way more than you also pay relatively less overall. Not only that, but what you'd effectively be doing with a consumption tax is passing on higher prices of goods and services to consumers, which is exactly what pro-business people say they don't want to do all the time. And this would leave most American households with not just a higher tax burden than the wealthiest earners, but also lower spending power overall. And since things would be much more expensive, you're looking at a big drop in consumer spending too, which right now accounts for 70% of the US GDP. Studies show that GDP would immediately drop as much as 5% just right after the implementation of a consumption tax. It's also no surprise that studies have shown a correlation between consumption taxes and rising levels of people who depend on government benefits to survive, because they just can't afford as much anymore. And we see this in countries that implement these taxes. It forces more of the population to rely on welfare to get by. So I've mentioned that rich people should pay their fair share in videos before and on social media, where you should absolutely follow me, by the way. And one commenter on one of my posts asked a question which was not grammatically correct and had no punctuation, because of course. And what they said was, "What is fair share to you?" And I'm just sitting here like, you know that I don't personally make the tax rules, right? Like, it's not up to me. Just because I'm pointing out the immense inequality. I just want some of the adults in the room to stand up and deal with this shit. But if you want me, a random guy on the internet, to give you tax policy advice, then I guess here we go. We're gonna do that. Now, historically, the American tax rate for the very rich has gone all the way up to 94% at its height. A lot of people poo-poo the heck out of this and try to pretend it didn't really happen, but this was the time that we had a lot of really nice things, and the government took care of us. And technically, we took care of each other. And we were heading even further in that direction and almost followed the lead of the entire rest of the developed world by providing universal health care for citizens and all kinds of good stuff. But then all that was derailed by lobbyists and McCarthyism, and weirdly enough, by one group of well-meaning school teachers who could not possibly foresee the consequences of their actions. And I talk a little bit about that from the perspective of healthcare in my video about why the US healthcare system is a complete pile of exploding trash. One of the solutions that's been proposed by policymakers on the left, and the Biden administration even once put forward a plan for this, is to tax unrealized gains. And there are even different options about how you might actually do this, but basically the point is to make it so that if your wealth goes up, you get taxed on that increase. Potentially, instead of waiting for the person to sell their assets, which they may never do, and then they die, which is the die part of buy, borrow, die. And when that happens, that increase in wealth, no matter how vast over the course of their lives, is no longer subject to tax. And this is just a completely absurd aspect of our tax system that I honestly cannot even believe we've let happen. This is totally nuts. When someone dies, stock that they own steps up in basis, which means that the former basis, or the original price of that stock, is now just gone forever. And according to the tax code, the value of the stock currently, when it's inherited, is the new basis. So step up in basis means that all of the stock's growth is just completely vanished in the eyes of the IRS, and you pay nothing on all of that increase, no matter how much it was over the life of the previous owner. Which is, again, totally insane, no matter how you spin that. Step up in basis also creates a situation where there's just no impetus to ever sell anything at all, because why would you? You could just keep it going forever and just never pay taxes. And this is called the lock-in effect. It happens when a particular rich dude is locked into an asset because the amount of money it's going to accumulate over time if it's not sold is just so much more massive than the liquidity they could get if they sold it and then also had to actually pay taxes on it. So instead of realizing those gains, they just keep generating immense amounts of unrealized wealth. One of the proposals to tax unrealized gains that's going to be the least disruptive is just to tax those gains when a person dies. There are even a couple of ways to do that. One is to simply carry over the basis, which is called carryover basis, so that the growth that an asset had doesn't just get buried forever when the owner does. And when someone sells it down the line, they'd pay the full taxes on it. This is probably, again, the least disruptive possible option, but also the tax collection aspect is only theoretical in this case because, again, the heirs might just never sell. Now, interestingly, Canada actually counts death as a realization event, and so heirs pay the full taxes on assets at that point. And in exchange, Canada doesn't have an estate tax or an inheritance tax. And that sounds sort of like a pretty decent compromise, especially when we look at the further context about the different groupings of the ultra wealthy and what they're really doing with their money. And even so, beyond all of that, there might be a simpler option than all of this put together. So let's look and see. A 2025 study from researchers Edward Fox from the University of Michigan and Zachary Liskow from Yale dove further than anybody ever has into the available data on what rich people actually pay in taxes. The results that they found were very thorough in the sense that they covered unrealized gains and the buy, borrow, die tax avoidance strategy for different income groups. And one really important thing they found out is that in reality, the buy, borrow, die phenomenon is much more of an upper middle class strategy than it's really used at all by the super wealthy. Borrowing is a form of unrealized gains for the top 10% amounts to just 2.4% of their overall wealth, and just 1% for the top 0.1% of the Richie McRichersons. However, the upper middle class, or Americans in the 50th to 90th percentile, their borrowing amounts to 42% of all of their unrealized gains. So what the researchers concluded is that the ultra wealthy, as in the top 10%, use a strategy that should really instead be called buy, save, die. They say explicitly at one point that the gist of this is that basically the ultra wealthy make so much money that they don't have to spend even a tiny fraction of it. That means they can save most of their liquid income, they can invest in assets, and they can just live in luxury without having to borrow at all. And this tidbit is really vitally important information because opponents of taxing unrealized gains always come out with the argument that without selling assets and realizing the gains, people taxed won't be able to afford the taxes. And, woe is them and all. I mean, you try telling the IRS that you just can't pay your taxes and see what happens. But people argue that they're just living off of these loans, and therefore they have the money to pay off the interest rates for those loans, but not the money to pay the taxes. And now we can definitively see that this really just isn't true. Because the people that the unrealized gains tax would be targeting aren't the people that are living off these loans at all. They're the people who are so rich that they're not moving money anywhere because they don't have to. The Fox and Liskow study points this out by saying that the consumption of these ultra-wealthy individuals is just smaller than all of the various liquid income sources they have going on. So we're talking about people who quite literally have more money than they know what to do with. We're talking about people who don't even have to take advantage of the tax avoidance strategies that lots of people are outraged about. That's how much money they have. Like, these things don't even touch them. The other thing they point out in the paper is that the immense amount of savings these liquid assets then go into, because there just isn't enough in the entire world to spend all this money on. So, you have to put it somewhere. I mean, mine's in my mattress and buried in the backyard in a series of holes and geometric patterns, overall in the shape of Paul Rudd, but someone else might use a bank, I guess. So not only is the wealth of these people growing exponentially from unrealized gains, like the rest of the top 10%, it's also growing by an order of magnitude higher than that because of the fact that their liquid income is so high that they can't spend it. And that gets saved and then reinvested too. I personally cannot fathom a single reason why we shouldn't tax people like this at much higher rates. I feel like this weird narrative of the struggling billionaire is just so pervasive today. But I also think that's because people genuinely don't have the real information and just never find out the actual numbers. And that's the reason I did this whole video. And also propaganda. Propaganda is a huge problem for you and me because the super rich people have a ton of money to put into it. And one really, really surprising thing that Fox and Lizgow point out is that we're actually capturing a good amount of the economic activity of the ultra wealthy as it is. And I guess I've never really thought about an actual number before, but I think it's fair to say that I'm a little surprised that this much of their money gets taxed. They estimate it's about 60% of economic activity for the top 1%, and then that falls to about half for the top 0.1%, and that part doesn't really surprise me. And then they point out that the only thing that we really need to do in actuality is just raise the taxes at the top tier income levels, and we get more of the rest of it. Because according to the data, as they have analyzed it, it really could be that simple. Of course, it's impossible right now to get all of the unrealized amounts into the taxable income pool with the current tax code, so we'd never actually be able to tax the rich at 100% like you and me and most of the people who live in America, but we may be able to get much closer just by increasing the top tax brackets. Maybe just missing out on the 27% of wealth that's tied up in unrealized capital gains. Super surprising, maybe, but super simple. Another thing we could do that would be relatively painless for most everyone, except the people at the very top, would be to raise capital gains taxes. Because a lot of rich people dollars comes from this category, and I can't assign motives with 100% accuracy, but likely the reason that this is true is because capital gains are taxed at much lower rates than salary. Whatever the reason, preventing the wealthy from cheating the tax system by only taking income from sources that's taxed at low rates could be a good place to start with the whole, fixing this stuff. If I was making these decisions, I would absolutely start with just raising the top tax rates for the top brackets. And then I'd give it a bit and I'd see what we pulled in. And if it wasn't going as well as it could be, or if there was political capital to even out the system a little more, then I'd raise capital gains taxes. After that, I'd start looking at potentially more disruptive policy that might make certain people a little uncomfortable, like finding ways to tax unrealized gains that would be the least awful. But then again, I don't know why I have this weird tendency to want to be apologetic about it, because I'm also a person who very honestly believes that being a billionaire at all is a genuine moral failure. So I really wouldn't mind starting at the point where we tax unrealized gains so we can get rid of this entire legacy of generational wealth and power that's entrenched at the very top. I would personally love to make America a level playing field again, and the people who preach this kind of rhetoric for the most part out in the world are the same people who are benefiting the most from our current system. America is not a level playing field. It's not a land of dreams anymore. It's a corporate entity, owned and operated by moneyed interests who stagnate social and economic progress for anyone below a certain net worth. And I hope that you're able to see that by taking a real look at these numbers. The tax system in America simply does not make sense. It hurts regular people, it hurts itself and its confusion, and it bends over backwards to benefit the people who start with all the money in the first place. And these days we have a solid amount of quality data that shows us how things could be instead. And we know the real numbers behind the taxes that rich people and ultra-rich people pay, and the amounts that they successfully don't pay. I just did a video where I broke down the numbers on billionaire philanthropy, which is another smoke and mirrors thing they do in order to lower their tax bills and purchase social and political capital. So check that out if you get the chance. It's time to push for better, fairer tax policy in America that bolsters everyday people and rewards the middle class and does not put an unfair tax burden on the bottom 90% of people, at the same time furthering their inability to exist in today's economic reality by contributing to their diminishing spending power. Let's make the wealthy pay their taxes. Let's make corporations pay their taxes. Let's have them contribute more to the tax pool that we all benefit from. Let's do some good about tax policy in America.